What if the fastest blockchain for trading isn't Ethereum? What if it isn't Solana? What if it's something that isn't even on your radar yet? What if the most undervalued asset in this market cycle is hiding in plain sight, quietly building the foundation for a new financial system? That blockchain is SEI. And after this video, you'll never look at crypto infrastructure the same way again. Let's start with where we are in 2025. Bitcoin and Ethereum ETFs are live. The US Federal Reserve and European Central Bank are cutting rates. Liquidity is returning, and institutions are entering altcoins not just for speculation, but for exposure to infrastructure. This is not a hype wave. This is the early phase of a longer cycle, one that will decide which chains matter and which disappear. And while meme coins might grab attention, infrastructure is where the serious money flows. Let's break it down. SEI is a layer 1 blockchain, but it's not trying to be the next Ethereum. It's not a playground for every use case under the sun. It is engineered for one thing: high-performance trading. From the ground up, SEI is built to support large volumes of transactions, complex order types, and sub-second finality. Most blockchains were not designed with trading in mind. SEI was. Launched in August 2023 by SEI Labs, the project was founded by Jeff Feng and Jog veterans of Goldman Sachs and Robinhood. They didn't want to clone Ethereum. They wanted to rethink finance from scratch. So they took inspiration from systems like NASDAQ and rebuilt them on-chain. Their conclusion was clear. For crypto to scale, trading needed a purpose-built engine, not a general-purpose smart contract platform. SEI's solution? Build the logic of trading directly into the base layer. This is what sets it apart. SEI uses frequent batch auctions, an innovative mechanism that groups transactions and executes them at a single clearing price. This eliminates front-running. It reduces latency games. It ensures fairness. In other words, it levels the playing field for traders. Now let's talk about architecture. SEI is built using the Cosmos SDK and powered by Tendermint's consensus. This gives it rapid block times and immediate finality. But it doesn't stop there. It also supports inter-blockchain communication, known as IBC, allowing SEI to connect with other Cosmos chains seamlessly. But here's where it gets even more interesting. In early 2025, SEI launched version 2, its most important upgrade yet. It brought full Ethereum virtual machine compatibility. It also optimized parallel processing, allowing SEI to settle trades in under 500 milliseconds. That's faster than almost every blockchain in existence, and, in some test cases, even faster than Solana. The upcoming Giga upgrade goes even further. It's expected to multiply throughput by 50 times, pushing SEI into Web 2 level speed territory. We're talking execution layers that rival centralized exchanges while staying fully decentralized. But performance means nothing without adoption. So who's building on SEI? Quite a few. Vortex Protocol is delivering decentralized perpetuals. Levana is offering synthetic leverage products. Orderly Network, a middleware layer for DEX liquidity, is live on SEI. Builders are creating order books, options markets, risk engines, and synthetic equities all natively, using SEI's infrastructure. And it's not just crypto-native projects. World Liberty Financial, a traditional asset management firm with billions under management, has made a strategic investment in SEI. Canary Capital filed to launch the first ETF built around SEI staking. This is not noise. This is signal. This tells us institutions are watching SEI closely, not for speculation, but for execution. Let's zoom in even more. What is the SEI token used for? There are three main functions: staking, governance, fees. Validators stake SEI to secure the network and earn rewards. Users pay gas fees in SEI when executing transactions. And token holders vote on governance proposals, including inflation schedules, protocol upgrades, and validator changes. The tokenomics are designed with sustainability in mind. A portion of every transaction fee is redistributed to validators and delegators. A separate fund is allocated for ecosystem development grants, liquidity incentives, and strategic partnerships. And early contributors, testnet users, and builders received initial allocations to ensure broad participation, not just VC control. But that's just the beginning. SEI is expanding support for WebAssembly smart contracts, making it easier for developers from traditional software backgrounds to build on-chain applications. This opens doors to more than just finance. Think gaming, think digital identity, think enterprise use cases that demand fast execution and low costs. Still, let's be real. SEI isn't perfect. It is still early. It has not been tested under extreme volatility. Validator decentralization is still in progress, and its governance systems must evolve with scale. The narrow focus on trading could be risky if macro conditions shift and speculative volumes drop. Meanwhile, competitors like Solana, Aptos, and Ethereum Layer 2s are moving fast. But focus can be a strength. While others pivot across cycles chasing trends like NFTs, games, and AI, SEI has stayed locked on its mission. Build the infrastructure that global finance will rely on. That kind of discipline is rare. That kind of clarity is valuable. Let's pause for a second and really consider what SEI has already accomplished. Launched a purpose-built Layer 1 chain. Integrated Cosmos SDK and Tendermint consensus for fast finality. Deployed innovative auction-based execution to eliminate front-running. Released version 2 with EVM compatibility and sub-second finality. Attracted major DeFi and TradFi projects. Preparing Giga upgrade for 50x throughput. Expanding into WASM smart contracts. Secured strategic funding and ETF filings. And it's only been 2 years. Now ask yourself this. If tokenized assets become the norm, treasuries, real estate, equities, which chain will handle the execution? Which chain is already thinking like a matching engine? Which chain can settle faster than centralized platforms while staying trustless? The answer might be SEI. So what does this mean for you? If you are an investor, SEI offers an asymmetric bet on infrastructure. Its market cap is still relatively low compared to peers, but its fundamentals are among the strongest. If financial infrastructure becomes the core blockchain use case, SEI becomes indispensable. If you are a builder, SEI is a dream. It removes the friction of writing everything from scratch. It provides order matching, execution logic, and low latency performance out of the box. No reinventing the wheel, just building the future. If you are a trader, this one's obvious. SEI was literally built for you. Fast, predictable, efficient, no slippage games, no mempool manipulation, just results. Let's say it like it is. SEI isn't a meme, it isn't a copycat, it isn't a ghost chain. It's infrastructure, it's execution. And in crypto, execution always wins in the end. This isn't about hype, it's about architecture, it's about performance. It's about staying early on something that could quietly power the next wave of decentralized finance. If this video helped you see it hit like, if you want to stay informed on the real foundations of crypto, subscribe, and if you stayed until the very end, drop the word precision in the comments. That tells us you're one of the few who actually care about what matters. This is Crypto Wayfarer. We decode, we simplify, we follow the money, and we always stay early. We'll see you in the next one.